So many business owners wonder, what the heck am I supposed to be saving throughout the year for taxes? Like, how do I even begin to calculate that? So in this sneak peek, we're going to cover a little bit on how to calculate what to save from your business throughout the year to pay for taxes. The easiest way to figure out what to save is to use your effective tax rate. So don't freak out if you don't know what that is. We're going to go over that right now. But what we are going to do is use the effective tax rate to help us calculate how much to set aside from each sale for your business for taxes. So calculating your effective tax rate is really pretty simple. Here's the calculation. Total tax divided by your adjusted gross income equals your effective tax rate. Multiply that by 100 and that gives us the percentage. Keep in mind, if it's your first year in business, I want you to add 10% to whatever you end up with in this calculation. And that's to cover self-employment tax, which you don't need to worry about right now. Just add 10% if this is your first year. So the first number you're going to need to find to help you calculate the effective tax rate is the total tax from your most recent tax return, which is probably 2017. So this can be found on page 2 of Form 1040 on line 63. So check out last year's tax return, look at page 2, line 63, and write down that number. The next number you need to find is your adjusted gross income from page 1 of your 1040. So take a look at page 1 and look at line 37. So now we have our total tax in our AGI, and we're going to simply divide our total tax by our AGI, multiply it by 100 to get our effective tax rate. Now there's two ways we can estimate what we need to be saving for the current year for taxes. We can run an example like this with our actual numbers, or we can estimate it, which we'll talk about in a second. So we have our effective tax rate, so we'll look at our sales minus our cost of goods sold and expenses, which gives us our net profit. Multiply your net profit by your effective tax rate, and that'll give you an estimate of what your tax liability will be at the end of the year. Now, if you don't know your net profit, or you don't want to spend the time calculating it, you can also take your effective tax rate and multiply it by your profit margin. Don't freak out if you don't know what your profit margin is. Use 30% as a pretty general estimate. So for every sale that you make, you should set aside this percentage for federal income tax. Effective tax rate percentage times 30%. Use that percentage, multiply it by your sales. Okay, let's recap because that's a lot of information. Your tax is determined by so many factors, but typically your personal tax situation stays pretty consistent from year to year. So we can use our prior year tax return to estimate our current year tax liability and come up with a pretty good estimate of how much you should be saving for taxes. So that's our goal. Estimate how much you're going to need to pay for taxes and start saving now. Okay, there's really so much more we could talk about when it comes to saving for taxes and actually calculating what you should be saving from each sale, but we don't have time in this little sneak peek. So if you want to learn more about that, go to tackling-taxes.com, and I actually created a worksheet where we calculate your business net profit or loss, and then we calculate what you should be saving, including what you should be paying for quarterly estimated payments.